Welcome to the Hardcore Mortgage Real Estate Business Show. Would you believe it? December 19, 2020. We are brought to you by Capital Mortgage Funding. We have an unbelievable show today. Start you off with Harry Glanz. Good morning, Harry.
Good morning, Harvey. Year-end show. What are you going to do about it? 2020 almost over. Can't wait to see it go.
People can't wait. Exactly. We got Becky on the line also.
Hey, good morning, everyone. Thanks for joining us on the last show of the year.
Right. And of course, Lisa Lawson, who's with her gorgeous new red sweat. What do you got? I don't even know what you got on your head. She's got all sorts of mistletoe
Listen,
hanging.
She is Christmas spirit.
All right. Maybe Johnny will come down and give you a kiss. Well, good morning, everyone listening out there. 902 here on 97.1 The Ticket. We bring you the Hardcore Mortgage Real Estate Business Show. And is John Cole there? Did John Cole plug it? There he is.
Yeah, it's all right, Harvey. I'm just chopped liver over here. Thanks, buddy.
I don't know. You look like you just crawled out of bed, but we know you've been up for a while already. We know you've already ran a couple miles and did all that fun stuff. But John Cole,
that's right, buddy.
Great to have you on the air. Top 1% of all originators here in the United States. So a jam-packed show here. And Harry, we got a lot to share in this 1 hour show. Of course, our last show for 2020. And as you mentioned, Harry, maybe a lot of us want to hurry up and get this year over with.
Yeah, we like to bring on, as a culmination of the year, Harvey, going into a new year, but we like to bring on the experts in the mortgage industry with Becky, John Cole, Lisa Lawson, of course, you. I'm just along for the ride. And let everybody know that there are still some things in the year that they need to take care of while rolling into 2021. 2020 has been an unbelievable, strange, odd, weird year to say the least. However, there are some silver linings. What's the silver lining? Interest rates are at all-time lows and the real estate market is very hot, Harvey.
Families couldn't wait. Yep, Harry, no doubt. Families cannot wait to, find out what the new was going to be. And the new meant staying home, making a place, Becky Alley, making a place for the kids to study. You're dealing with that. Setting aside a home office, all those good things, and a big shift that we started with back in April.
Yeah, honestly, it seems like it was a lifetime ago that this first quarantine that we had to do happened. But it's pushing a year ago. It seemed like it drug on, but then at the same time, it seemed like it was 2 years ago at this point. Yeah. Just because, we were fortunate to be so busy the whole entire time and working to kind of keep up with the housing market demand and all that stuff. But it did change the face of real estate. COVID-19 truly did. It changed what people were looking for in homes. It changed whether they're going to stay in their home. It changed the way they looked at their own home. Did it fit their wants and needs? Could they make it work? And, and a lot of people said, no, this house does not check all the boxes of needs. And others said, you know what, let's just ramp it up and let's totally convert and change your homes around. It definitely put a focal on real estate in a big way.
Lisa Lawson, there's no doubt, even headed into 2020, we were already experiencing a mad rush in real estate. As Harry always mentions, the last 7 or 10 years, just fantastic. There was already a shortage, Lisa, of inventory out there. I think even when the pandemic started, we were only looking at about a 3-month supply. That supply's been down to about a 2-month supply as demand is through the roof.
Yeah, this is definitely the year if you're going to buy a house to be prepared. It's not going to be as easy as it may have been a couple of years ago when there's an average of 6 months of supply. You have to be ready. You have to know exactly what you want. You have to be kind of willing to know what your top dollar is. Your first offer is probably not going to be accepted or it may get counter offered. You have to know all these things. Part of that is making sure your pre-approval's in line and you have a clear understanding of what your abilities are. It's a great time to buy a house. I don't want people to be discouraged to think that they're not going to get what they want. Preparation is key.
Keep your mortgage local is my theme, John Kolb. And we see a lot of quotes coming in. And, the average family out there only holds on to their mortgage between 4 and 6 years. Again, there's lots of variables out there that would give a family a reason to change their mortgage. And John, we're seeing some of the quotes and some of our clients and our friends and family, they're getting bombarded by strangers and they want to charge them $8,000-$10,000, basically stealing their equity away from them just to do a refinance.
Yeah, there's still the predators out there in the water, guys. Just because 2020 is a strange new year doesn't mean there aren't people out there taking advantage of you. I had a phone call with a buddy's father who was calling me, asking me if he should do something. And I analyzed the last refinance he did since he left us, and there was about $30,000 in missing equity. And it went to costs to the competitor that did everything over an app and online without mentioning any names. And it was real quick and easy, kind of like a spaceship. But it was one of those things where it's, it really hurt me to the soul, because one, this is somebody I know and it's close to me. And just seeing somebody lose that much equity, even though his payment went down and he's now at that very low interest rate, they did not do a service by him. And that makes me very angry for people in our industry.
Harry, you mention it all the time. Interest rates are at all-time lows. You just have to try to put the mortgage together that'll fit your situation. And as I mentioned, you might not actually need to keep the mortgage that long. Again, you could stay in your house for a long time, but if you're just getting a 30-year mortgage now, you might refinance this loan 5 or 6 or 7 years. How important it is to have the understanding of what these costs are and how it impacts that interest rate?
Well, if anything has shown us, Harvey, the last 4 or 5 years with rates continuing to slide down, people have been refinancing in record numbers. Rates won't stay this low forever. You've got to do your homework. You've got to go with somebody you know and you trust and that you have a relationship with. We say it all the time. Dealing with strangers, like your mother said when you were a kid, is rough. Don't talk to strangers. Make sure you ask the right questions. If you have an existing relationship, call that relationship up. But still, get everything in writing. And I can't say this enough, because there's going to be a day in time when rates are going to start going up. What are you waiting for? Lock in that rate now and lock in that savings now. So yes, Harvey, people have been doing it. We've been doing this 30 some years, and we've been very lucky and humble and honored to serve our community over and over again by doing the right thing for people and giving the right advice. And as John said, sometimes it's better not to do something than to just do something because somebody wants to go ahead and spend $5,000, $6,000, $7,000. Don't do it. Or in John's case, $30,000. It hurts me like it hurts all you guys. Just do the right thing and we'll take care of you.
Becky, Alley, no doubt this pandemic is the related shutdowns. I mean, it's driving people nuts. I mean, it's scary for a lot of families out there and businesses that are affected by the shutdown, but it's public safety stuff. But again, it changed our world. It changed our real estate and mortgage world, but not a whole lot. We had the 2-month shutdown, Becky, maybe in April, and then it broke in May, where families just had a little bit of a change. The open houses aren't like they used to be and stuff, but the housing bubble, it exploded. I mean, it's absolutely unbelievable. Every family out there, maybe they're talking to their sister, their family, their cousin, they want a piece of this. Nobody wants to rent anymore. With these all-time low interest rates here in Metro Detroit, Becky, it's way less expensive to become a homeowner than rent.
Yeah, I mean, if you're renting right now, everything's on the table. I mean, if you're paying $1,200 in rent, I mean, that could be a $200,000 house, depending on what taxes are, maybe a little bit less than that. That is going to be yours. You're now investing in your own future. You're no longer paying someone else's mortgage payment. Why invest in someone else when you can start investing in yourself? But Lisa made a point earlier where this is the year you have to be prepared. You cannot go shopping for homes and then say, okay, get me pre-approved. You have to know what you're getting into in advance, and that's where we step in. We're going to make you feel comfortable. We're going to tell you what your payment is, because it is very competitive. There is a lack of supply. This is a seller's market because, like we talk about, there's no inventory. What does that mean? That means that there's probably, I don't know, maybe 100 good houses out there that you could literally turnkey, maybe a little bit less, I'm not sure, but you have to be in there and know that you might have to go a little bit above asking. And when you're comfortable and you're having the conversation up front, you feel at ease. You don't want to have buyer's remorse. You don't want to go in and say, I'm going to pay $5,000 more for this house and then sleep on it and not really know what you just did. So that's where it's very important to have the conversations, know what your payments are. So when you do see that dream home and you do put that offer on paper, you can rest your head on your pillow at night knowing that you made the right decision for your family when they say, accepted.
Oh, we'd love to hear that. Hey, a lot of families out there trying to figure out how they can get into the home buying market. We're going to give you all those answers right here on 97 on the Ticket. Give us a call, 248-539-9797. We'll be right back.
Hi, Harry Glantz and Dan Burke from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
All right. Well, welcome back to the show. Here we go. A little funky music here to get it going. Yeah, we are broadcasting live from the Jamie Samuelson Studios here on 97.1 The Ticket. Of course, the Hardcore Mortgage Real Estate Business Show. We are brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, NMLS 2289, Equal Housing Lender. You can catch us at Capital Mortgage all week long at 1-800-LOW-RATE, the best mortgage banker. Deal with real professionals. Our panel this morning probably has closed over $300 million in transactions this year. This would be a great call if you want to learn about mortgages. If you have family members that definitely want to get a mortgage, have them call us at Capital Mortgage Funding. We do the Zoom broadcast. If you hear a little feedback on our show here for the hour, just hang in there with us. And again, give us a call. We'd love to hear from you. Hey, let's go over to Lisa Lawson. Lisa, a couple of the buyers out there, it's a struggling market. A couple working with, I was all week long, and it got to the point on Thursday, and he said, Harvey, maybe I should just wait till the spring of next year. And the most important thing about that is, Lisa, what's going to happen in the spring of next year?
I mean, obviously we don't have crystal balls and we can't say for sure, but I would say the majority of experts are going to say it's not going to be much different than what it is now. It's not like all of a sudden there's going to be a flood of new properties coming on the market. And especially with COVID, I think people are going to be staying at home and maybe not apt to move quite as often as before. So if it's something that you're thinking about doing, I don't know that waiting till April is going to be much different than it is now, with the exception of you won't have to move in the snow.
Yeah, John Cole, single family construction's picking up. I mean, it's up 23% from last year, 2019 numbers. And there's been some suburban shift where some of the families across the United States, I don't know if we get it as much here. Every region's a little bit different, but there's no way the new construction is going to fill in the void of the lack of housing that's out there. And again, this 2-month supply, we don't see it really going much higher than that when you look at the early winter of 2021 and the spring of 2021.
I mean, I totally agree. I think new construction is going to be hit pretty hard. Well, not hit pretty hard, but hit because of the cost of all the materials. I mean, the lumber that's needed to build a home now is double and triple what it used to be. So, take that with the short supply of tradesmen that are out there, and you got yourself a house that may normally cost you $300 may cost you closer to $400 now. And that's a huge jump. So, even though the housing prices are up on resale homes, it still might be a better buy than, a new construction home. It's all in what you want and how long you're going to be there. If don't be scared to pay an extra $10,000, $20,000, $30,000 if it's going to be the house that's going to be your dream home. The difference in that price each and every month is anywhere from $40 to $120 more a month. And if it's going to be your dream home, do it and cut something else out.
Yeah, John, Harry, he makes a great point. He talks about the cost of the materials, the cost of labor. That's driving the cost of the new construction up. So these builders, Harry, they're not building 1,200 square foot homes, starter homes. They are building the luxury homes, that next step up home. So it won't fill in the void. But again, we don't see any reduction. The cost of labor is not going to go down. So if you're thinking about home ownership, Harry, it's still the basics, supply and demand.
Yeah, what you're seeing right now, Harvey, with builders is that they're building 24, 25, 2,600 square foot homes, taking the place of 35 and 4,000 square foot homes. But what we've learned in 2020 is people should live where they're going to live. If they go back into an office, they can always drive, but it's very important to live where you want to live and make sure that your living arrangements conform to what your lifestyle is. So while new construction, again, there's labor shortages, material prices have gone higher. We could see that a lot of people are going ahead and redoing their existing homes. They're adding on. Harvey, they're adding those pools in there. They're doing a lot of things. They're knocking down walls, making a more livable space. So that's what 2020 has really taught us. You have to be very flexible now, very, very flexible.
Hey, Becky, there's no doubt that with the stimulus package, it could already be built in the market. These interest rates are at all-time lows. We're trying to refinance as many of our family and friends and our clients and get them done. What do you see, Becky? Just give us a little what you see coming forward in the next couple of months. We talked about it on a few of the podcasts and everything. But again, interest rates could change on a dime with this vaccination hitting. But there is a lot of things that are still going on out there as many families are still out of work.
Yeah, I mean, we preach if it makes sense now, lock in your rate. I mean, the whole like you will drive yourself crazy trying to, it's like riding the stock market, like to time the lowest point to buy in to turn around and sell high. It's you either get lucky or you don't. I mean, so right now we are at that low end of the curve and the rates have been pretty steady for the last several months as far as where they're at. I mean, we see movement every day. I mean, it's a little bit here, a little bit there. You wouldn't even know it. But if it makes sense for you now, lock the rate. Because if you are going to get into that mindset of, well, it might go down an eighth in 2 months. The rates are lower in February. People used to say that to me all the time. I heard rates are lower in the month of February. Like, stop it. It's just that eighth of a difference is literally going to be $3-4 to your payment. And it really is insignificant. It's about don't be greedy. If it makes sense for your family now, just do it. I do think that we are going to see rates to stay pretty consistent just because the economy does need some healing time. I mean, there's been some people that have really, really been hit by the unfortunate consequence of COVID-19, even though we kind of tend to focus on the positive side of the things that have happened. I mean, but we're not taking light of the fact that some people really have been hit very, very hard. So if a way that we can save you some money is a refinance and you can capitalize on these rates, do it. Have the conversation, but don't just do it like Harry was saying earlier, or John, just don't do it to say because it sounds cool. Like, so don't pay $30,000 to go from 2.8 to 2.625 just for the novelty of to say, hey, look what I got, because you sound foolish when you find out that you paid $30,000 of your equity for what, $3,000 over the life of the loan. You got to be smart about it. And we're not here to steer you. We're here to educate you and help you. And I have no problem telling someone no if it doesn't make sense. And I know the same for all of you, so just go into things with your eyes open. And that's all we can really do.
Yeah, hey, we continue to push our clients towards knowledge and really understanding what a great deal is and not handcuffing you to a high cost mortgage. Again, mortgage interest rates are at all-time lows. If you're not going anywhere, this is your forever house, it's already the house that you think you're gonna, this is the one you're gonna retire in. Well, maybe taking a look at buying down your interest rate. Understand what that means. So often when we get clients to call, we actually just break down the simple math for them. And again, try to figure out what mortgage is going to make the most sense for you. One of the things we know for sure, John Kolb, is that 15-year mortgage. Boy, if you're out there and you've got a 30-year mortgage, if now you've gotten rid of the mortgage insurance, the PMI, the MIP, you've got equity in your house, and you don't see anything in the future where it's going to be where you're going to have to refinance that mortgage, maybe that 15-year, now's the time to go ahead and do that.
Yeah, I mean, the 15-year, like I always tell people, 15-year is my favorite product. You get a better interest rate. The amount of interest that you pay over the life of the loan is so much less than it will be on a 30-year fixed. But the number one thing is you got to be comfortable with that payment each and every month, because that payment is going to be $200, $300, $400, $500, $600 more per month, depending upon your loan size. And so the good thing about where rates are now is that the 30-year fixed is anywhere from a quarter to a half, maybe 5/8 worse in rate than the 15-year. So it's not the percent and a half like it used to be back in the day. Right. So if you're kind of on the fence about what to do, go with that 30-year fixed. Pay extra when you want to turn it into your own 15-year fixed. But then if you need that extra savings any given month or a couple months in a row, then don't just pay the 30-year fixed payment and use that money that you've been throwing at the house to pay for those kids' braces or whatever you may need to do. Just be smart about making your decisions, because once you get into that 15-year fixed, you're tied to that higher payment regardless. You can always pay more. You can never pay less.
Yeah, we'd like to say it as be married to your spouse, not your house.
Like that one too. Make sure your locations definitely suit your lifestyle needs. You can always fix things in the house, but you can't change that location. How important it is to have a great financial team and real estate team behind you. When we come back, we'll talk about putting your great team together. Home ownership 2021, 248-539-9797. We'll be right back.
Hi, Harry Glanz and Danberg from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Welcome back to the show. It's the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. In our 21st year, want to thank all the listeners out there, all the clients that have worked with us at Capital Mortgage for the last over 30 years. And definitely, we're going to be there for you in 2021. Your friends and family need to call 1-800-LOW-RATE. That's 1-800-569-7283. Shop local. Get your mortgage done locally right here in Michigan. Again, we do loans across the United States, but you can trust us. You can see us. You can talk to us. And tons of experience. People always knock the experience thing. I don't know. There's nothing could be more beneficial when you're home purchasing or when you're getting mortgage to deal with experienced people that have been around the block that can talk about things that happened, Terry, 10 years ago in the market. There's the doomsdayers, Harry. There's the flat earther guys out there and women, and they're stocking up on water and toilet paper now, Harry. But we once in a while get these strange texts or conversations about, are we setting ourselves up for a housing bubble burst? I don't see it. You explain to me, Harry.
Well, the answer to the question is, we're here in a period of time where interest rates are at all-time lows. Okay, they're lower than they were in the 1960s, 1950s. What does that mean? That means if you lock in a rate now, if you buy in a house, you refinance now, and you lock in a rate now, whatever happens is going to happen, but you'll have the lowest rate that's ever been produced in the history of mortgage banking. So I don't know how that can be a bad thing. Now, if you're looking to buy a house at the absolute best price and you went ahead and you overpaid, you're looking to flip it a year and a half, 2 years, you could be in trouble. Maybe you are, but I don't know anybody doing that right now. When I say that, people have to look at everything long-term. Everything's a long-term play. Life's a marathon, not a sprint. You've heard that said many times. So if you lock into a low rate now and you plan on staying in your house for a long time, what's the downside of that? I'd like somebody to call me, email me, text me, whatever. So who's ever out there saying negative things, just give me a call. We can discuss it.
Yeah, it's a good conversation.
It's different.
What'd you say, Becky?
Well, I was just going to say it's different. I mean, the underwriting guidelines that are out right now in comparison to when the housing market had that moment in history, I mean, it's totally different. I mean, there's such a scrutiny as far as to make sure that these mortgages are qualified. And there was a lot of people out there getting really bad loans because there was no leash on, like that industry, real estate and mortgages. So what happened is we had to get licensed, and it really kind of weeded out a lot of the scam artists out there that were just writing bad mortgages that people could not afford. And it's not like that anymore. I mean, it has to be, we review it, the underwriters review it, then it goes to quality control. I mean, no one is trying to put anyone in a bad spot, and nor would, like anyone try to repeat yesteryear's mistakes. Now, housing market, is it going to go to the moon? No. I mean, eventually we're going to reach a plateau where everyone is kind of settling into what these home values are. But that doesn't mean that, like if you're securing these historically low rates, it's a payment that you can afford. And in the event that you lose $10,000 of equity, I would never understand with people just being like, oh, I'm done paying it because I lost $10,000 of equity and I can't sleep now. It's silly. It's always going to work itself out. If you're living where you love, stay there, and it is what it is. And just, save the money while you can save it, and just make smart decisions, and just don't go all crazy willy-nilly doing things that don't make sense.
Lisa Lawson, the families that kept onto their homes, though, even through the tough times of 2008, 9, and 10, and 12, up through 12, they're very happy they hung onto their houses. There were programs out there for families that got mortgages at Capital Mortgage Funding. They were able to take advantage of the Home Affordable Refinance Program. Again, this is another reason why we urge you to deal with real mortgage bankers. And I'm sorry to knock the credit unions, but they're good for the car loans. But hey, they didn't offer the Home Affordable Refinance Program. It's very important that you work with lenders like us. We deal with Fannie Mae and Freddie Mac and the government agencies that protect you. They did protect us 10 years ago.
Yeah, absolutely. Which means back then, if you had bought a house and the values had dropped and all of a sudden you don't have the equity like Becky was saying, but you still have a job and you're still working, you still made the payment, but you then all of a sudden couldn't refinance and take advantage of lower rates. Those programs allowed people to take advantage of lower rates without actually worrying about what their house will appraise for. It allowed people to refinance up to a higher amount, even if maybe the appraisal had come in less. I think there was up to 125%. Pretty common was, up the value was one of the programs. I think there were some even higher than that. But, again, you have to be working with someone who understands the programs, that you're in a qualified product. You're not doing any of these willy-nilly, no stated income, no stated assets. All of those types of programs don't follow in the parameters that we're talking about. The key is we have to be sure that you can repay the loan back. That's what we're talking about, and regardless of the amount of value in your home or equity that you may or may not have, if you have a job and you have income, you should still be able to make the payment. It may be that you don't have a lot of equity to tap into at this moment, but like Becky said, if you hang in there, just like we all have, it will come back. The people, I built my home in 2006, literally right before the crash, obviously. And I'm in the industry. There's no crystal ball. We don't know what's really going to happen in the future. but I stuck it out. We have tons of equity now, love where I live, you know. It's really about a lifestyle and what you want to provide for your family. And regardless, is everyone's like, well, I'm not making the mortgage payment anymore, and they're giving up. Why would you do that? You still have ownership in something versus paying someone else's mortgage. Why would you rent? You're throwing money away for nothing.
Hey, Lisa, it's funny you brought that up. The families that did walk away from their house, they called us 2 years later and says, how do I get back into this house?
Yeah.
They wanted back in right away.
Yeah.
Hey, John Cole, what about the families like yourself, John, and individuals out there that are saying, you know what, I'm ready. I'm ready to buy that vacation home, that second home. That market has taken off in 2020. And because you can live, John, you can be up north and you can work up north, or you could be down here in the southern part of Michigan, be anywhere, and you can work from home. So second housing, John, they go fast, and you better be dealing with some qualified agents.
Oh yeah, I mean, we've got a bunch of different people trying to buy some second homes now, just, a couple hours away, 4 hours away. And, but if they're waiting to get on the road to get up there and take a look at that house, the house is gone by the time they get there. So you just got to be able to make sure that you're making offers. You got to get yourself in line with a realtor that you trust and that's going to work with you, because if you're downstate at work and a house pops on the market, that realtor better know your needs and wants so that they can put the offer in for you sight unseen. Now, does that mean that you go, through the whole process without seeing the house? Absolutely not. You still have your inspection. You get up there, you take a look at it, make sure it's the house for you. But it's a competitive world, and it's exciting to see. I love getting up north to on the weekends, and I don't like all the traffic that this is going to create. But when I get my helicopter, I guess I can just pop from one place to the next. That's on my Christmas wish list, Harry. So yeah, it's great to see. The rates are great for something like that. And if you're not going to travel as much airlines and out of state like you used to, then why not have a place in a state where it's awesome 9 months out of the year?
Hey, anyone out there can still get a mortgage. There's no doubt about that. Harry, it got a little stickier because of some of the self-employed families out there. They're not essential jobs. So again, their industries were affected a little bit differently. Everyone's affected differently. So the mortgage industry, especially in the jumbo loan here, if you're self-employed, you can still get a mortgage, but it requires just a little bit more documentation. Just tell everyone, Harry, a little bit about the jumbo industry out there and why these loans are taking a little bit longer.
Well, I got a barking dog, Harvey. Go to somebody else. It's live television, so go somewhere else.
No, I'm glad the dog's barking. He's like, Harry, what he's saying in dog barks, Harry, is why should a jumbo loan take any longer than a conforming loan? That's what I always say. But there's no doubt out there that, Lisa, we see it, Becky, it requires a little bit more documentation. We're required to get the year-to-date profit and loss statements for all self-employed borrowers, a balance sheet, and additional bank statements to see that they're not in trouble, that this is going to be a viable mortgage. And again, this leads to that conversation about, are we in a housing bubble? Are people going to walk away? No, they're not.
No, I want to jump in hard. The reason why these jumbo loans are taking longer to do is because they are investor specific. So when you underwrite or you originate a loan and you're going to designate it to a certain investor, you have to make sure that you're meeting that investor's guidelines. And if there's anything that they think might be on the fence, they're going to go to that investor and say, hey, what do you think about this scenario? Are you going to buy it or not? So, when you're doing conventional loans, you're underwriting to a general pool, Fannie, Freddie, Ginnie, whatever you're going to do. So you have other outlets in the event that it doesn't work out. Jumbo stuff takes a little bit longer because you're going to a specific investor, and that's where you're earmarking it.
All right, we still got a couple more segments. Keep it here on 97.1 The Ticket, 248-539-9797. We'll be right back.
Hi, Harry Glantz and Danberg from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
In our 20th year, coming up in our 21st year here on 97.1 The Ticket, the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. Call us at Capital all week long, all weekend if you want that real approval letter. That's 1-800-LOW-RATE, the best mortgage banker. Yeah, there's a difference. A real approval letter means you've been gone through and you've gone and broken down all your documents. Again, your tax returns, your pay stubs, debt to income ratio, your credit. You've got the funds to close. That's what your real estate agents want to hear in today's competitive marketplace. And that's what we'll do for you. Get a real approval letter, deal with the real professionals, Capital Mortgage Funding. That's where you'll find all of us all weekend long. Hey, we got tons of sports coming up. We're going to have Pat Caputo following us here on the Hardcore Mortgage Show. Jeff Rieger will be stepping in, I believe, at 2:00. Dan Leach to follow up. And Harry, would you believe it? Tons of sports out there. The Big Ten Championship, Northwestern and Ohio State at noon. We've got Clemson, Notre Dame at 4, and of course, Florida taking on Alabama, whoever they are, Alabama at 8:00 this evening. So keep it here on 97.1 The Tickets. Tons of sports. We got great news coming up, of course, in 2021. Not only will we be back, Harry, but the Detroit Lions will be back here on 97.1, of course. All sports, you will find them here at The Ticket. So we're excited again, looking forward as many families are getting control of their lives and doing these debt consolidation loans here. They're making these man caves up because, yes, more and more families are at home. The kids are at home. And because you're not out spending money at restaurants recently, which really is a bummer for the restaurant industry, but you're not going on vacations, people have been saving money. So there's a lot of money out there. And that's why we've talked about some of the families looking at vacation homes or, again, just really redoing their house, because that's one thing. That where you live, where your roof is, that's very important for your family's lifestyle.
Yeah, as John mentioned, there are people buying up north and all around because, listen, who wants to go on vacation right now and stay in a hotel? But if you had a place up north, you go up north, you spend family time, spend Christmas up north. Or if you go down south and you have a place, Florida, Arizona, Texas, wherever you're going, and you have your own place, it's going to be a lot safer for you and your family. We're seeing a lot of that right now, and 2020 has to be a year, and going into 2021, a year of adjustments, a year of flexibility, and you have to go ahead and you have to live where you want to live, okay? So that's the message I want to send everybody going into 2021. Be safe, be smart, get your financial house in order, and we can help you save money.
Becky Alley, what's going on in your purchase world? You're always slammed with buyers out there. The numbers show that 40% of the transactions were about purchases and just a little bit over 60%. So it's a little closer, about 60-40 refinance versus purchases. Becky, what are you seeing in your purchase world?
I feel like my numbers are kind of pretty spot on to that little statistic, because you have a lot of buyers out there, but they're struggling finding that perfect home. So obviously refinances, people are taking advantage of it, and good for them. And on a note of the refinance too, I'm not hearing so much of the people saying, I'm going to wait till they go lower. I think consumers did learn from yesteryear's mistakes where they missed it in 2016, because that was the last time the rates were even close to this. So I feel like people are understanding the sense of urgency, and they are really taking advantage to put themselves in a better financial position. Now, as far as the purchases, whoever's out there right now, they're serious. Sellers are serious. The buyers are serious. I think some sellers are hesitant because of the unknown, because of this pandemic and all that stuff. But at the same time, there are people still moving around. And, so I do think that we're going to see, a consistent, steady purchase transactions. But again, there is a little bit of a shortage there just because people are having a hard time finding what they want. But that doesn't mean they're not serious, and it doesn't mean they're not motivated.
Lisa, I always want to talk about the credit part of getting a mortgage. Keep your credit score up. Things families can do, especially during the holiday season. Don't go jamming. If you're thinking about buying a house, February, March, you're going to want to keep your balances down on your credit card. Talk about the importance of some of the things you can do with your credit to keep your credit scores up.
Yeah, I mean, obviously it's very tempting to put everything on a charge card, max out those balances at Christmas and think, I'm going to get, my tax return money, I'm going to pay all those balances off. When you do that though, even for the couple months that the balances might be high, your score is going to most likely take a pretty bad hit. And if you get all that, paid off and you're like, look, I got this, I got a little bit of money left over, we're going to buy a house, I pull your credit. It takes 30 to 60 days for those paid, that amount that you're paying to catch up to how it's reporting on the credit report. So when you call me in February to say I got my big bonus or my big tax return and I paid off all those credit cards, that score might take till easily March or April to reflect that. So you have to be careful on how you're utilizing your credit. It doesn't mean that you don't utilize it at all. I'm not saying that, but make sure that you're working with someone that can explain exactly the impact that what your intents are doing or what your actions are doing, and how to I don't want to say correct it or rectify it quickly. There are things that we can do to get it done quicker, like rescores, but it usually applies to one or two bureaus on one trade line. We can't rescore if you have maxed out 5 credit cards, you know what I mean, and you've made 5 payments. It's not something that's feasible. So, there's a lot of different ways to fix things, but just be responsible, obviously, but have fun.
John Kolb, if you're putting 5% down on a house, you got PMI. If you're putting 10% down, traditional PMI, unless you want to look at a lender paid PMI program, but you better have higher credit scores if you're going minimal down, because the PMI monthly payment is going to be affected by your credit score.
Well, yeah. And PMI is, if you've got good credit and a decent, 10% down, PMI is nominal on a monthly basis.
Yeah.
So, don't be scared of PMI. I mean, PMI saves 20 grand in your pocket and you're only paying $47 a month for it. And that 20 grand then can be applied to new furniture, new windows, whatever the case may be, things that you would normally put on a credit card. $47 a month for that stuff, you're winning. Just and now the future is still to be told, right? But the way things are going right now, we're seeing people come back to us after putting 10% down in a year and a half, running things through to refinance them and not even needing an appraisal, and they already have their 20% equity. So, that's not a guarantee. There's no guarantees in life, but it is a trend that we're seeing right now where you're able, with the increased property values and paying down on the mortgage, you're able to easily get out of PMI pretty quickly versus the 8-9 years that you normally would wait.
That's just the key, John. You got to understand what mortgage you're signing today, because you need that knowledge to understand where you're going to be 2 or 3 years from now. And you got to have that trust and that knowledge in order to pull the trigger and do the right thing for your family. Again, home ownership is so much fun. We've never been able to really understand it as much as we would in this pandemic time, as more and more of us are at home and spending more and more time at home. But hopefully things will change in the future. But even if they do, there's nothing wrong with having that pool in the backyard, Becky L, or having that fitness workout facility in your basement or your home office. So these are all the things that have become important, and families are starting to take a look at it. Again, we don't know what 2021 is going to bring. We have a pretty good idea of what it's going to bring, and hopefully the vaccine really kicks in and we find that we're on top, and this pandemic is starting to get behind us again. Play it safe out there in 2021. And we urge you to call Capital Mortgage Funding. Again, urge your family and friends to get in touch with us. Again, you could speak to the real people. We'll break down the numbers for you. There's no hidden ball tricks over at Capital Mortgage Funding. You're going to get a straight deal, and we have a history of it. So try to deal with the most honest, trustworthy lenders right here in your own backyard. Capital Mortgage Funding, very important. Home ownership, guys, just always love talking about it. We talked about the credit. We talked about funds to close. Yes, there are some down payment assistance programs. Lisa, if you just want to touch on it real quick, the MSHDA program is still alive and kicking.
Absolutely, yes. Everyone believes that to use MSHDA, you have to buy your first house ever. That's not the case. MSHDA is a program for repeat home buyers. There are credit requirements, though. You have to be at least a 640 if you're a first-time home buyer, a 660 if you're a repeat home buyer. And then they'll give you up to $7,500 towards closing costs, partial down payment. The rates are very competitive with that program, but they are non-negotiable. They're issued by the state of Michigan. So sometimes we get calls saying, well, can I get a better rate than, what that is? I heard there's rates that are, maybe 2.99 on a 30 or 2.875. And unfortunately, the MSHDA rates are MSHDA rates, but they're going to give you money to close that you don't have and sometimes can't close otherwise. So it's definitely a great program to check into. It's one of my favorites. Everyone knows I've used it quite a bit.
Do that. Yeah. Michigan State Housing Development Authority, of course, call Capital Mortgage Funding to find out if you qualify. The key with that program is there are credit score limitations, again, 640 and above, but also income limitations. Again, all programs that are out there, they're not for everybody. You got to call the experts and find out what program might set yourself up for the future.
Really? No.
That's very key. Harry Glantz, a couple minutes here left. What do you got to wrap up 2020?
Wrapping up 2020, can't wait to see it go. But in the meantime, we got a couple weeks left. Want to wish everybody a happy and healthy New Year and a Merry Christmas. Spend as much time with your family as you can and let us save you money. We can do it. We'll be around in 2021 to do it. But right now we're locking in a lot of people on their new home purchases because purchases are going strong through the end of the year, and refinance to that lower rate, but lock it in because there's going to come a time when we're going to come on this show and we're going to say, we told you rates were going up. Do it now, save money, forget about it. Everybody, happy and healthy new year. Honored and humbled to be with all you guys. I appreciate all you guys. Just stay healthy, everybody.
All righty, a little salute out there. Again, we're going to miss all you folks that are no longer with us. Jamie Samuelson, of course, we'll see you in our next life. Benny Napoleon, we're going to miss you, man. A real warrior and a trooper for the city of Detroit. Anyone out there who's missing some loved ones out there, we send our prayers and blessings and for a better 2021. Be sure to get your family set up for the best mortgage possible. Call Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. We got Pat Caputo in the bullpen. He's coming up with sports. Keep it here on 97.1 The Ticket. We will see you in 2021.